We are in truly unprecedented times. On Friday, the CARES Act was written into law, and while it's largely being called a stimulus package, I've certainly been using the term stabilization package more than anything. I think the real outcome right now is just to help businesses survive and get through this really challenging time that COVID-19 has brought upon us. And a lot of the package information, while is certainly a much needed relief, it also does come with its share of headaches, confusion, and a lot of gray area. I've spent about the last 72 hours nonstop talking to business owners, really going through the ins and outs of the act and really what it means to businesses. So I do have a pretty good knowledge base to go off of, and I hope I can pass that along and share it with you. But I do want to add a needed disclaimer. My co-host JR and I, neither of us are lawyers nor tax advisors. So nothing today should be taken as tax or legal advice. Please understand this presentation is educational in nature. And our hope is that you will get a lot out of the presentation. But of course, each person's situation is unique and as such needs to be treated as such. So with that out of the way, we'll kind of lay the agenda as far as what we're going to be covering today. Lot came out of the CARE Act, but specifically, these are the major items that are really coming into focus, and I know causing a lot of confusion, but also opportunity for small businesses. So these are the ones that we're going to cover. Specifically, the disaster loans. Those are the emergency injury disaster loans that were actually put forth a few weeks prior to the CARES Act, but there's been some updates since then that I think will be helpful to cover. And then the meat of the presentation is going to be on the Paycheck Protection Program, the PPP loans, which were initiated on Friday with the passing of the act. So I'm going to cover a lot of information there. For the San Diego locals on the webinar today, I'm really just going to briefly talk about the city-specific loan. There's some better resources that I'm going to point you to that'll be applicable there. And then my co-host JR is going to come in and talk about commercial insurance. A lot of people are asking, where does my commercial insurance fit into the mix amongst everything that's going on? To wrap up, we're going to conclude with some actual next steps. And then we're really excited. We have an offer that's going to be available to a select amount of businesses that we'll be able to present at the end of the presentation that I think some of you will particularly be really excited about. So a little bit of background. As I mentioned, I've been kind of nonstop on the phone with businesses the last 3 days. My name is Rick Vazza. I'm the president of Driven Wealth Management. And a large part of my role is serving as outsourced CFO, specifically to small businesses. So a lot of what I'm working on right now is around their cash flow strategy, cash flow forecasting, and as you can imagine, really digging into the meat of what this act means as far as funding options available. So that's really where the context of today's presentation is going to come around, directly from the owners I've worked with, and then as a business owner myself, my own experience going through this process as well. I'm going to kick it over to my co-host, JR, and allow him to introduce himself.
Hey, everybody. My name is JR. I've been working with small businesses on commercial insurance protection programs and also kind of dive in holistically, which is how Rick and I kind of came together. He actually helps me with my business and my cash flow. And when this whole thing came up, he really took the bull by the horns. And a lot of you guys I invited personally because I insure your businesses and I understand the challenges that you're going through. So I just wanted to make sure that you guys know all of your options and have somebody that I trust that can help take you through a process if you so desire. So let's dive in. Rick, it's all yours.
Awesome. Appreciate it, JR. All right, and I'm going to do my best not to bounce around too much, but I do, along with the presentation I have prepared for everyone, I want to point you to some extremely helpful resources that the SBA has provided. The actual bill itself, I'll highlight a few points there. And then specifically for San Diego City, there's resources I'll show you there as well. So I'll try not to make it too confusing as I'm jumping around, and hopefully the technology works out. But we're going to start with the presentation around the two major funding packages that are really front and center in the news right now. Okay, and I think the reason I broke it out this way in the presentation, if you can compartmentalize these two different options, it's going to do a real service in understanding how they're different. And then ultimately, they do have some ways in which they interact. And so I'm going to hit them very high level initially, and then we're going to dig into them in a lot more detail following. So the first one, as I mentioned, that came out a few weeks back is the Economic Injury Disaster Loan. So EIDL is the acronym there. And that has been available for a few weeks. The basic premise of it was when it started rolling out, there were a few states that were initially signing on, and it was kind of like a waterfall, whereas one after another was being declared a disaster zone, basically nationwide at this point, as you can imagine. And what these loans do is they allow you to apply for up to $2 million in low interest loans with a 30-year payback period. So pretty generous payback. And as you can see here, the interest rates are very favorable. So 3.75% for private companies, and even better at 2.75% for nonprofits. Now, importantly, their loans themselves, it's an interesting process because what you're doing is you're actually applying directly through the SBA, which is an uncommon process. Normally, the SBA is kind of providing products that you're applying for through traditional bank channels. So this one is fairly unique in that you're going through the SBA itself and you're applying on their website. And I'm going to show you some more information there. But this was specifically rolled out because of COVID-19 and the clear impact that it was going to be having on the economy. So it was a way for people to apply for working capital loans. Now, that being said, the process was a little confusing in some regards because what you're doing is you're actually applying for an amount that you don't have, you're not even plugging in a number. So you're just applying, and then the way we interpret it right now is the Small Business Administration is reviewing your application. They want to make sure, number one, you have the ability to repay, and number two, they are going to be checking credit. So you have a good credit history, although I've heard that the history there, the score is pretty lenient. But they do want these loans to be repaid. These are not handouts. So I just want to make sure that's very clear. Because there's a second aspect of the EIDL, which is kind of newer. And that's where a lot of attention is coming. And that is this part, the EIDL advance up to $10,000. And I'm going to talk more about that in the next slide. But essentially, it's a two-step application. So step one is you're applying for the disaster loan itself. And then step two is they've now said, okay, you can actually request an advance on that loan up to $10,000, and they're going to turn that around, they've said, in 3 days to hit your bank account, and it will be forgiven. So just a little teaser there. I'll give more information, but it's, as you can imagine, that's been getting a lot of attention right now with that type of provision. Okay, so think that one. Disaster loan strictly because of the impact that COVID-19 is having on the economy. So if you can kind of compartmentalize it, that's how that one came about. Now the newer one is the PPP loan, the Paycheck Protection Program. So good news here, they have not started accepting applications. We just received guidance from the SBA. Those are not going to be opening until April 3rd. So you're not behind the eight ball, and this presentation hopefully will arm you with the information so that you can feel very comfortable moving forward. But this came out of the CARES Act that was approved on Friday. And an important piece of information is this is going to be really the way you want to compartmentalize this is just think of it as what they're trying to accomplish with this loan is they want people to continue getting paid. They want paychecks going to employees. So as long as analogy to this loan is paychecks to employees, it's really going to help you compartmentalize the purpose of this loan and why they're doing what they're doing. This is not just a free handout. This is not used to take this money and then go build a new office. Think PPP means paychecks, 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 right? It's all about getting paychecks into the hands of people because they don't want people getting laid off and having to collect unemployment and having the economy spiral even more. Okay, so what exactly is happening? Well, for 99% of us, and I imagine everyone on this call, the actual loan amount that's going to be relevant is this one here, 2.5 times your average monthly payroll. And we've gotten a little bit of mixed guidance on what's going into calculating that. Initially, the bill said it was the last 12 months. The SBA actually just put on their website it's the last 8 weeks. So we've gotten a little bit of mixed messages from what exactly is being used to calculate that. In a nutshell, this is going through your banker. So you are going to be speaking with your business banker to get the PPP loan. It is a SBA product that you are going through the banker to get. So your banker is going to be able to give you a lot of guidance, is my point in saying that. So don't get too worried about a lot of the minutia and the details around, what qualifies and all of that. Just know that your banker ultimately is going to be the primary point of contact in processing this part of the loan. But importantly, what they're essentially looking to achieve is the average monthly payroll for the business. They're going to provide a loan of 2.5 times that amount. And so once that loan is provided, there is then what's going to be called an 8-week covered period. So over the next 8 weeks, that money can be spent on specific provisions. And if spent on those provisions, the loan will be completely forgiven. So that's why it's getting so much attention. That's why people are really excited about it. And again, paychecks, 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 a primary provision for that use of loans is providing paychecks to employees. And I'm going to go into a lot more detail on what that looks like. The other piece people have been asking is, well, Rick, what if there's a portion that isn't forgiven? What do I do? Well, we just received, literally within the last couple of days, more guidance from the SBA. The unforgiven portion of that loan is going to convert into a 2-year loan, extremely favorable interest rates at 0.5%. So I know that's a lot of information at high level. Again, I'm going to dig into these deeper individually, but just try to compartmentalize to start. EIDL is a disaster loan for economic reasons that they're trying to give a low interest, long-term loan to get working capital out for businesses. PPP, paychecks, 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 is specifically they want paychecks going to employees. They don't want employers to have to lay people off and have this thing spiral out of control. So hopefully with that, to start as context, that'll be helpful, and then we'll dive into each of them individually. I'm going to get out of my slideshow here for a second, and I'm going to actually bring us over to the SBA's slideshow that they have. And this is really helpful because it's directly from the horse's mouth as far as who qualifies, what the process is. And we're going to make the resources that I show you in the presentation, we'll make available to you. We'll follow that up with an email along with the replay. So rest assured, we'll get this all out to you as well. But as you can see, there's some really powerful information, and the SBA has done a phenomenal job of getting in front of a lot of questions here. But importantly to note, you don't have to take the loan. So a lot of people have been, concerned about, applying for something and then getting stuck with money. But what is pretty helpful through this process is they're really trying to make it easy on all of us. There's no cost to apply. There's no obligation. And you can see, even without personal guarantees or collateralization, there's a pretty generous amount. And then this is huge, right? I mean, the deferral for 12 months on top of the low interest that they're already providing. So I already touched on some of the details, but importantly, how can I use the loan funds? Pretty broad use of funds. The real big piece that you need to know is it cannot be used for expansion purposes. So these are economic disaster loans in a sense that they are because people are under economic distress. So the money really needs to be for sustaining operations. You can't take this money out and then go think of, expanding if you're one of the fortunate people who are actually doing, well during this time. So it's just really important to know that. I won't go through all the eligibility criteria, but really important to know is it's just really broad. They're including a lot of people, and importantly, this is probably the question I'm getting asked the most, is yes, sole proprietors, even no employees, as well as independent contractors have been made eligible under both loans. So that's important to recognize. A lot of the times people wouldn't have thought that they would have been included. They are, and that's a huge benefit. Ineligible are really going to be an area that you could look at because it's pretty limited as far as actually who's ineligible. So this is a really broad and wide-ranging loan eligibility criteria. As I mentioned, these are the two primary reasons for approval. And you can kind of see pretty clearly here, ineligible uses are anything that are more expansionary by nature, right? You're not going to just be able to take the money and go give yourself a huge disbursement. But if you are the owner operator, you are able to pay yourself your salary for performed services. And so that's important because a lot of people have asked, if I'm a sole prop and I have just pass-through income, how am I showing that? Well, as long as you have a nice clean audit trail, you could pretty easily show that you're actually using that money to pay yourself that normal wage that you previously were that was negatively impacted from the economic changes that we've had. So a lot of great information here. They've done a really good job of getting in front of the questions. I'll include this as well, but just some of the information that they're asking for. I've gone through this application. I won't lie, the application is actually pretty confusing. And it can be challenging. So that is one of the areas that it just is what it is. They're doing their best. That's one of the areas we've certainly been helping a lot of people in getting this money. That is pretty much the first part of the disaster loan. The second part that I wanted to explain is the advance. This is where things get really interesting. So with the SBA process, again, you're applying for the initial kind of just working capital loan, and you don't even know how much money you're applying for. They're reviewing it and they're going to get back to us. But in the meantime, you're then able to do basically a second step in that process. And that second step is listed here. And this is pulled directly from the SBA website because I've told a lot of people this and they haven't even believed me because it sounds like such a great opportunity. But what you're then able to do is you're able to apply for an advance on that loan up to $10,000. And with that advance, they're literally going to ask you for your bank account as you're going through the application. And they say within 3 days of a successful application, they're going to have that money deposited into your account. I mean, we'll see if it gets to 3 days. But the point is they're trying to turn this money around fast. They understand businesses need cash and they need it yesterday, right? So they're trying to get this out quickly. They've rolled this out. And most importantly, check out this last line here. This loan advance will not have to be repaid. So really, really important. I'm going to put a little asterisk there because that's how it does factor into the PPP loan. I'll explain this in more detail, not to get too confusing, but you will, if you do take this advance, it is going to impact the PPP loan, and I'll explain how it does so. But just really important to note that you are able to apply for $10,000 in advance, and that money, whether you're approved or not for the loan, is going to get turned around to your bank account. So huge, huge opportunity there. And you can see kind of what they've put on their website. It's pretty generous as far as the process goes. So shifting gears now, again, paychecks, paychecks, paychecks. So what this loan is doing is with this, they are calculating the average monthly payroll is what we're really looking to achieve here. And then it's going to be 2.5 times that amount is kind of the loan eligibility criteria. So what is going into that? This is where things get interesting. And going back to the sole proprietors, independent contractors, they're making this really broad. And this language right here, so salary, wage, commission, or similar compensation. So similar compensation is the one that has a lot of people kind of scratching their head at what exactly they mean by that. And that's it. Again, this is going through your banker, so it's going to be great to ask them, hey, what part of my compensation applies as I'm making these calculations? Because they're going to have you go through a payroll, cost calculator and showing, how much payroll you have and all of that is the guidance that I've received so far of what they're asking. But importantly, it does include those, businesses, sole proprietorships, and independent contractors. So this I pulled directly from the bill. And you'll see really important, because this is one of the questions I've gotten the most is, how do you know if I'm included or not as an independent contractor or sole proprietor? Well, it's because the bill tells you. So the sum of payments of any compensation to or income of, so that's the big words there, a sole proprietor or independent contractor. And then again, they go into the same type of calculation there as far as that inclusion. So again, really broad as far as who's going to fall into this. And that's a great opportunity to, if you're a business operator, to be able to tap into this program. So there are a lot of line items listed here on the left-hand side as far as what's included. I think the big ones that I'm tending to see with the businesses that I'm talking to are their normal payroll expenses, payments to independent contractors, because again, that would normally not have counted, and now it is, group health benefits, and retirement plan contributions. Those are kind of the big four. You can see there's more there, but those are the big four that are really, if you're a business operator, you're going to want to be looking through those expenses, and those are what's going to be included in coming up with that average cost. And so that's where it's important. Again, I drew this out, this kind of division table, and then the times before we got the recent SBA guidance. So the bill originally said it was the last 12 months. The SBA now says it's the last 8 weeks. My advice is just talk to the banker, get clarification on, hey, what exactly do you need from me in order to move forward with this? High level though, it's all about payroll. That's really what they're looking to accomplish with that. All right, so then what happens? What has everyone so excited about this, this loan provision? Well, it's the forgiveness aspect of it. So as long as these funds are used for payroll costs, interest on mortgages, rent, and utilities, that portion of the loan will be forgiven. Recently, the SBA came out with even more guidance. This was literally just rolled out. They are now saying, because of the demand for these loans, they're expecting 75% of those proceeds are actually going to be needed for payroll. Again, paychecks, paychecks, paychecks. That's the huge priority here. So really the other 25% can go towards interest on mortgage, rent, utilities. But the primary purpose, 75% of this loan should be focused on payroll in order to get the entire loan forgiven. That's brand new information that the SBA just came out with. So kind of timely in our conversation today. Again, loan payments will be deferred 6 months, so a little different than the disaster loans, but also helpful. And then again, the forgiveness piece, you'll really want to keep detailed records. I'm going to talk more about that, but I think anything you can do to have really tight auditing standards will be important, because again, they're going to be checking to make sure that this money was used for these purposes in order to qualify for that loan forgiveness. Okay. Now, importantly, there's reductions in place where if you are not keeping the same amount of payroll and staff, and I'll go into this in more detail, they are going to actually reduce the amount of forgiveness. Okay. So it's important to know, again, they want everyone to maintain employment. That's the whole point of what they're doing here. And if you are taking that money and then reducing staff or reducing their salaries, the amount of forgiveness is going to be reduced. And we don't know, we haven't gotten guidance on exactly what that reduction will be. But just to tell you how they've framed it in the bill, and I'm not going to go into super detail on these formulas. I think that's not what we need to do in a presentation like this. But essentially what they're going to do is, over that 8-week period, if you've reduced the total salary or wages of the employees by 25%, they're not going to be considered a full-time equivalent employee, excuse me. So that is going to count against you, and the forgiveness on that loan would be reduced. Again, to what, we don't know yet. But they have put that language in there, and it's clearly pretty strong. So that's an important component. The other aspect of that is the employees themselves. So not only is it salaries, but there's actually the headcount. So headcount is going to be important as well. And again, I won't go through the actual formula, but basically what they want to see is the number of full-time equivalent employees prior to the loan proceeds coming and after are going to be the same or somewhat close to the same. And there's a formula that they've introduced, and your banker will be able to kind of walk you through that as you're going through the loan application. But just know, again, this is all about paychecks going to people. So this will be reduced if you are not keeping them on payroll or maintaining similar salaries to what they were having. So it kind of basically frees up a little bit of extra money towards rent, utilities, and the interest on mortgage payments is really the big design there for forgiveness standards. All right, a lot of information there. There's one more really important point about the payroll cost inclusion that I want to make sure we cover, and I wanted to do it separately because it's so important. So there are some ineligible aspects of payroll that do not get counted in this calculation. The most important one is wages over $100,000. So they are not going to disqualify you if you're making over $100,000 from receiving this, that you're still eligible, but they are not going to count your payroll costs above that 100,000 threshold. Okay, so really important there. They're going to put a cap on that. So as you're thinking about your employees and you're going through the average payroll, you're capping them at that 100,000 threshold. Okay, so that's a really important component of it. I think obviously I don't want high income earners to be over allocated in this process. So again, really going for sustainable operations here. I'm gonna talk about like the actual process here. So you've gone through, you understand what goes into it. Okay, this is payroll driven. I'm gonna literally probably first thing tomorrow, if not later after this webinar, I'm gonna contact my banker, let them know, hey, I understand this PPP program is in place. I'm interested in it. What do you need from me? Well, the best thing you can do is get all of your financial information ready, because again, these aren't opening until April 3rd, but get on their radar, let them know you're interested, get your financials in order, contact them, and make sure that they're aware. So once the green light is given, you're able to move forward. But then know that documentation is going to be key, because it's not just that there's like a magic wand at the end of this where these loans are forgiven. You're going to have to apply for forgiveness. There's criteria that they've put forth as far as what they're going to be looking at. So it is important, and it's going to be, over document is kind of the advice that I'm consistently giving to people going through this process. And you'll kind of see what they're looking for. They're going to see, verifying the number of employees on payroll, pay rates. That's how they're going to calculate those formulas that I was just talking about for reduction. Verifying payments on those covered policies, the mortgage obligations, the rent, the utilities. And then you are going to have to certify that you are applying for this loan in good faith. So important to know, there's no personal guarantee, but you are certifying that you need these funds and that you will be using them in good faith. So really important to recognize that. Okay, this is federal money. Awesome. Okay, thank you. So remember with the loan advance on the EIDL, I mentioned these two do end up interacting, and they interact in a couple of ways. So the way that the forgiveness is discussed is you cannot use the proceeds of these loans for the same purpose. So that's really important to know. So what that means is basically if you get your disaster loan money and your PPP money, and let's just say to make the example easy, you get it today, April 1st, and you have $50,000 in each bucket, just to make the math easy. you can't do payroll and you can't do payroll from the PPP and the EIDL. They need to be used for separate purposes. If they're used for the same purpose, you will actually lose the forgiveness eligibility of the PPP. So that was a really, I know, kind of a confusing thing that came up through this process. And one of the important aspects that they kind of gave as guidance is, well, let's say that you use the PPP loan for April payroll and June payroll. So you have that 8-week covered period. Perfect. Well, then you could use the EIDL for July and August, for example. So you could kind of separate the two in that sense. It's a little interesting how they did that, because they apparently don't want the loans to be integrated in any way. They're kind of keeping them compartmentalized like that. Just interesting to know. The other thing that's kind of interesting is they've allowed you to talk to your banker about refinancing the EIDL into the PPP. So I just want to point that out. I won't go into too much detail there because that could get confusing pretty quickly. But just know, if you've already applied for the EIDL, that doesn't mean you can't apply for the PPP. You can apply for both, and that's totally okay. They've made that very clear. The last piece is related to the advance. So if you have let's just say you got $50,000 of EIDL loan proceeds and $50,000 of PPP proceeds, just to make this easy on myself. Remember, you can ask immediately for a $10,000 advance. And this, you may not even have taken this, like this is fine, but you can ask for a $10,000 advance right away before you even know whether you're approved or not. So let's just say this came out. Just recognize that they're not going to have you double dip, right? Remember that this is forgiven, they've stated. Right there on the SBA website, as we talked about. That $10,000 they're giving to you, and they said it doesn't need to be repaid. But what they're saying is, okay, well, fine, we've given you that, and it doesn't need to be repaid, but you can't double dip. So now this whole amount would not be entirely forgivable. The forgivable amount of this PPP loan then becomes $40,000. And you are left with $10,000 that would convert to that loan. Remember, that's the 2-year 0.5% loan. I mean, it's still a great rate, so I don't think anyone's going to complain about that. But it's just important to recognize, I could see how this could easily cause some confusion if you're thinking, hey, I'm going to get $10,000 here, $50,000 there, the whole thing's going to be forgiven. Great. Not exactly. So if you get the $10,000 here, these do integrate in that sense, that it will reduce your forgivable amount. That's been guidance that's been given out, and seems pretty clear in their intent that they just don't want double dipping. So, I mean, the guidance I've seen with the businesses I'm talking to is this still makes a lot of sense to apply for this $10,000, because remember, that's cash that's getting turned around, they've stated, in 3 days. This isn't even opening until April 3rd, the PPP. And at that point, we don't know how long it's going to take the banks to process this. It could be a longer time. So when I'm talking to businesses that need cash yesterday, this is a pretty interesting and useful opportunity to be exploring. So it still could be beneficial. And again, I don't view this as a downside necessarily, that 10,000 is just converting to a super low interest 2-year loan. But really important to recognize that those are the ways that those interact. So again, we're keeping the funds separate. We don't want to be using those funds for the same thing. And the advance impacts the forgivable nature of the PPP. Those are kind of the two really big takeaways from how those interact. I'm going to kick it over to JR, who's going to talk about commercial insurance and really the role that this is fitting in with all the businesses that we're talking to.
Yeah, thanks, Rick. So let's just start off with business interruption. That's the elephant in the room. So most of the general liability policies have an exclusion for viruses, bacteria, and obviously the coronavirus kind of falls into that into that realm. There's also an exclusion for civil authority. So Governor Newsom has said, restaurants can no longer open up, right? Which causes business interruption, but because it comes from civil authority, government, there's an exclusion in most policies as well. Now, that being said, there have been a ton of business interruption claims that have been what is effectively called tendered, meaning that people have called in and submitted a claim for business interruption, gone through that process. And if the insurance company denies you, you have on record that you did submit for a claim, so that if the law changes at some point in the next few years and it allows or forces insurance companies to retroactively pay out on those claims, you would have already had a place in line. So that's something that I would highly recommend that you consider is if you've had any business interruption due to this situation, potentially talk to your attorney, have a conversation about possibly putting in a claim and then putting a little workflow in place to be able to have a conversation down the road about that if need be. Workers' compensation. The good thing about workers' compensation is that workers' compensation covers three things. It covers medical. If somebody gets sick or hurt at work, it covers death. If somebody passes away at work, there's a death benefit that pays out, and then it covers a portion of the paycheck. In California, I think that's 65%. So your workers are pretty much covered. If you're still working right now and one of your workers comes in and says, "Hey, I think I contracted COVID-19 on the job," you can take that to your workers' compensation insurance, and that process can start. That's pretty straightforward. One of the things that I think business owners often overlook is themselves. So as business owners, we tend to invest our money into our business. Some of us pay ourselves a salary. I pay myself a salary through my business. Some of us don't, right? Some of us just take distributions. But the fact of the matter is, most business owners are excluded from their workers' comp policy. And we do that mostly as a business owner because, number one, workers' compensation is designed for employees. Number two, it keeps your rate down to exclude your salary as a business owner. But by excluding yourself as a business owner, you exclude yourself from coverage. And most of you guys, I'm sure, have your own personal health insurance policies. So, JR, if I get sick or hurt, can't work, at least my health insurance is going to kick in, correct? But the thing that workers' compensation does for your employees that disability insurance would do for you as a business owner is it's going to replace your paycheck or at least a portion of it. So that's something that, I have conversations with business owners about a lot. But I think right now it's very relevant. Imagine if you, God forbid, were sick because of this virus and you yourself couldn't work. If you don't have your own disability insurance policy, there's no protection for your paycheck. So something strongly to consider. Also, a lot of you guys are in partnerships, or you have employees that work for you that are integral parts of your business. Key person life insurance or some sort of buy-sell agreements. A lot of you guys have buy-sell language built into your operational agreement, but usually the buy-sell is funded by life insurance, a life insurance policy. So if you haven't looked in that or you haven't done that, you have somebody that that works for you that, God forbid, something happened to them, your business will be in a world of hurt. The life insurance on a key person is something that is extremely valuable, but also in these partnerships. If you're in a partnership and, God forbid, one of your partners has an untimely demise, the money from the life insurance policy does a couple of things. It keeps you out of business with that partner's spouse, gives you the ability to buy the spouse out, but it also maybe gives you a little bit of runway to continue operations without interruption due to cash flow. based off of workload. So those are really the four things: business interruption, have a conversation with your agent about possibly submitting a claim, knowing that most likely it's going to be denied based off the language of most of these policies, but you're setting yourself up down the road. Workers' compensation, keep a close eye on your employees. If they're sick, ask a bunch of questions, but ultimately, if they do get sick at work and COVID and it doesn't matter what it is, you can turn that over to your workers' compensation. And then just having the conversation about the disability and life insurance. Rick and I truly believe there's going to be winners and losers in the next 90 days as it pertains to small business ownership. And so these are some of the things that I think that if you're really going to want to come out the backside of this thing in a better spot, start being proactive and thinking about it now. Because we want everybody that's on the call, we want you guys to be in a better position after this is all said and done, hopefully than you were before you came into it.
Thanks, Jared. That's a really helpful recap. And I think you framed that perfectly, because it's really true. I mean, as I mentioned, this is a huge relief to a lot of small businesses. But if not handled the right way, this is also going to bring a lot of headaches down the road. And so I think what we want to leave you guys with is a few action items that we'd highly recommend. And then, as I mentioned, we have the offer that I'll be really excited to potentially partner with a few of you at the end as well. So what should you be doing now? As I mentioned earlier, anything you can do to get organized and get in front of this is going to be extremely beneficial. Pretty standard documentation that's being asked for is going to be related to your business financials and your personal financials. Now, it's important to recognize the loans themselves are actually not asking for the exact same information, which can be a little frustrating. So if you go through one loan process and you have all your documents prepared, you're probably going to go through the other one and have to just find more. So kind of a helpful cheat sheet here. These are just going to be the common ones that are coming up, where if you have this information already, you're just going to save yourself a lot of work on the back end. And in many cases, they're asking for the most recent tax returns. They're asking for 2019 and 2018. And then with 2019, they're kind of saying if available. So they're not requiring you to file your taxes before applying. You'll probably remember having heard in the news that the tax deadline has actually been extended. So that there's no problem there. So don't worry if that's something that you think would be holding you up. They've made that very clear. But get in front of this. Again, one of the big processes is going to go through your banker. So I've been telling people, hey, it's never been a better time to get friendly with your banker who you maybe haven't talked to in a while. Let them know, hey, I was just on this presentation, heard about the PPP loan. What do you need from me to get on your radar, get started? And I've had a number of clients who have sent me the emails that the bankers have said, and they're just, hey, this is kind of where we're at. We're in information gathering. These are some documents we think you're going to need. And again, it's everything I have here for you. So you'll be doing yourself a favor. And then they're going to basically queue them up in line once this thing starts. As you can imagine, there's a lot of people who are going to be ready to go. So do yourself a favor and get that process started. The city of San Diego, as I mentioned, there's a direct online application specifically through sd.gov. And I'll again send that resource out. So that one would be directly through them. The disaster loan, kind of coming full circle to how I started the presentation, the application is unique in that you're going directly through the SBA, which is a little unconventional. They've updated, this is now the third iteration of the website since I've been working with people through this. And it is much better, but the application is very much the same. So you yourself can apply for the disaster loan online, and it'll take you through it. You also can access the Small Business Development Center. So something not a lot of people know about. It's a free resource. They're affiliates through the SBA. And they have advisors who are available. They can actually take you through the application for free. As you can imagine, they're probably pretty busy right now. So that would be something to consider. All right, these are a couple of great questions, so I'm going to go ahead and answer these. If anyone needs to drop off, feel free, but I definitely would like to help best I can. So if you have multiple businesses, do you treat each one separately? Each business has separate EIN and tax ID. So yes, and what's interesting is even they're on the application, they're going to ask you if you are a majority owner in separate businesses. So I was working with someone recently that went through, they have several different businesses. They were applying kind of across the board. And I mean, importantly, those businesses are employing people too. So I was, we were kind of joking together, like he's even probably be more in need of this type of support as he's an employer of multiple people. So that was kind of interesting. But yeah, the guidance seems to imply that there would be no problem, having each of those entities receive that funding. I'm going to read this question again just because of how important it is. If we have advised employees to file for unemployment and that gets processed, how does that work for me getting the funding to then bring them back on the payroll? So I can't speak to the unemployment piece. I just, that's not an area I'm knowledgeable enough in. However, the way the PPP program rules have been guided out are you can rehire those employees and be eligible for this funding. In fact, they would like you to. They're encouraging it. They, again, paychecks. They want that to be the case. So that is something that has definitely come up. And yes, as you're going through the application process, that will be important to do that. Now, there are some logistical difficulties in this, I understand. So, one of the questions that I was working with an owner through, and I'll be honest, there's not a perfect answer. I just haven't come across a perfect answer here, but is, how do I rehire them and then wait for the funding to hit, right? What am I doing in that intermediate time? Because it's not like those funds are coming tomorrow, most likely. And that was where we didn't have great guidance, unfortunately. One of the things they were trying to think of is work with payroll, figure out, when that payroll will be hit, maybe talking to the employees. I'm not an HR expert. I won't pretend to dabble there, but I will just point out that was a logistical hurdle that did come up in conversation. The other thing that I think would be important to point out, and not that anyone asked this question, but it has come up in some of my conversations. Some people's businesses, their employees literally can't work, right? They're, maybe they're retail or they're like a barber, like they can't be touching people. There's certain things that are just literally shut down. And so when I was talking about this with some of the owners, they said, sounds great, but am I just paying the employee to kind of sit on their couch? Like it, kind of seems difficult for me to figure out what they should be doing if I literally can't have them in the store, for example. And I'd encourage this. This is an awesome time to get really creative. And I'd also add maybe focus some energy to your online brand as far as the business goes. Because, right now, this is an example, right? There's a lot of free webinars going on. There's free trainings. There's so many creative things that are available now to these employees. For the longest time, I've heard employers, I'd love to be more available online. I'd love to be more present online. What an interesting opportunity to have some employees come back online with you, focus on building out that online presence, whether it's, social media, email campaigns, just general online marketing. There's so many things that you can be doing in that space. And, they could be maybe spending that first week just learning, all of that stuff, right? Get really creative with it. It's a fantastic opportunity to lay a phenomenal infrastructure for your business to, as JR said, come out as a winner, ready to just come full steaming out of this when it's all said and done and hopefully clears up. So just one other little nugget I'd like to add, which has come up in conversations, but it's tough. We're all going through a challenging time together, but there's also some really creative and pivots that are being made with businesses that's really exciting to see. And I hope you all participate in that. It looks like we're out of questions in the chat. Again, I want to thank you all so much for spending your time with us. We really appreciate it.